Hi guys, hope you're all well. I'm going to do the breakdown now, starting with GU, and I'm going to jump straight into it. So we didn't see much action on GU last week, but this first sell level here that I had at just under 1.3 did come very close. And the way that I was going to play this was that I was going to have two separate trades here, so the first one being this lower box and the second one being here. But I was going to split it into 4 trades, with the first trade coming at the bottom of the box here, and then the split trade for that one coming at the top, and then for the second zone, the first trade coming here, and then the second trade coming at the top of the box. Now the reason that this was the plan was because I did have quite a large area to cover, but because we came very close to the level at 1.3, what this now means is I can now adjust my play. So because this wick now came very close, I can now disregard it, and my first level will now come here, and I can cover this wick there. And for the second zone, I can now start from this wick and cover the next level up, which is also the 1.31 area, so I can bring it down a little bit just to incorporate that. Yeah, that's cool. So these are now my 2 areas. I can actually draw the next level up too, just in case we get it. So yeah, I'll just cover this level as well. And the way that I do this is the exact same as before. So the way I play it is that this level here now needs either alignment or timing with a strong move in order to go for the trade. And if we don't get that, then I'll incorporate a break of this level here and just take this one, as it'll automatically be a valid trade. Now, in the case that this one works, this level here works, regardless of whether I'm in it or not, I now need timing with a strong move or alignment in order to go for that trade. And then again, if we don't get it, I'll anticipate a breach and make that one an automatically valid trade. And that's just the system that I use for every single trade because I'm after accuracy-based trading. Now, in terms of the buy levels, the first one that I see is just the break retest of this level here. So I'll draw that up. Now, this is a level that I'm not actually interested in just yet, only because it hasn't done a big enough move up in order to be attractive. So I'll leave it for now, unless there's a fib in the area, which I don't think there will be. No, so the 23 I'm never really interested in, but the 38 is too far away, so I won't incorporate that level. But what it means is that now this level does have a 38 nearby. So what I can do is draw the box up, and now this will be where I enter the trade. But in terms of the next levels down, I'll keep drawing the boxes. So next level I can see is this one just here. So I'll firstly incorporate that wick there along with the EMA, but it's also at 127 too, so that's something I want to incorporate as well when it comes to the stop loss placement. And then I can even include another lower down wick as well. So yeah, this is the next level I'll be interested in too. So in terms of the fib up from here, yeah, we've already done the 38 there, but the 61 also is included in this key level and the EMA here. So that's a good trade to take. Now, in order for this to be an automatically valid trade, I would need a break of this first level in order to get into it. And again, the exact same as before. If we get to this level and it works, regardless of whether I'm in it or not, this level now needs alignment or timing in order to go for it. And if we have neither of those, then I'll anticipate a breach in order for this one to be an automatically valid trade. I'll draw the big fib too to see if that lines up with anything. So from the bottom there up to the top. Again, 23, I'm not really interested in. 38 doesn't have a level anywhere near, so I'm not interested in that. But this level here does have a 50 fib, so it does make it a little bit more attractive now. And we do have a little bit of news this week, so we actually have interest rate decisions for both the UK and the US, which means there could be a hell of a lot of volatility in GU this week. Now, if any one of these zones is nearby when the interest rate decisions are coming up, I won't take them. And the way that I'd want it to happen is that if we're at one of these levels, for example, I'd want one of these to breach. Whether or not it's got alignment, I don't really care. I need a breach of it for momentum to then slow down to then take the next one. Now, I'm not one to wait for confirmations, as I believe that they do deteriorate the risk-reward ratio. But in this kind of scenario where we do have a really strong driver, I do need some sort of confirmation in order for me to go for a trade. I need to know that momentum will slow down at one of these areas here. And if I don't have that reason, then I won't go for it. I'd rather be safe than sorry in this type of scenario where we have a massive driver. And the exact same the other way. So if the news release isn't too far away, I'd want a break of one of these in order to go for the next one. But I do need alignment so that I have enough reason for the momentum to slow down at that level. And if we've already breached this level by the time the data release happens, then I want a breach of this one too in order to go for the next one with alignment. Now, when I set my chart, right now I'm not going to send the entry, stop loss and take profits for the buys, only because there is a good chance that we will just breach this high here and then this fib will no longer be valid anyway. However, I will send the entry, stop loss and take profits for my sell scenarios. And then if we do have a move down on either Monday or Tuesday, I'll update you all with the entry, stop loss and take profits for these 3 buys here. In terms of alignment, this is my Dixie chart. So as you can see, we've had a massive push down over the past few days, just in regards to tariffs and concerns over growth within the US economy. So whether or not this is the bottom here, or whether we push through, does rely on how the interest rate decision comes out. Personally, I can see a more hawkish Fed just because of the way inflation has been over the past few months. It did drop this month by 0.2% compared to the previous results. But if we're taking into consideration where the Fed were at in the December meeting, they predicted that there would be 2 rate cuts by the end of 2025. But there's no chance that they would have thought that inflation is where it's at today. Inflation must be a hell of a lot more elevated than they anticipated it to be. So for that reason, I am expecting a hawkish Fed. There is a chance that it could be dovish if their main concern is the growth, because growth has been declining, and especially with the new trade policies, there could be a further economic slowdown within the US. And that's why this upcoming Fed decision is important, because it highlights whether or not they're going to focus on the weakening growth or the high inflation. But from a tech point of view, if GU is coming to one of the buy levels, when we have Dixie coming to one of these sell areas, then that'll be alignment for me, and vice versa. If GU is pushing up to one of my sell levels and we have Dixie on one of these buy levels, then that'll be alignment too. But in terms of GU, these are all the technical plays that I have for the week, but you do need to be careful because we do have 2 massive drivers coming up. Now, moving on to the S&P 500. Now, I'm actually going to do my breakdown with the NASDAQ as well. And the reason being is that NASDAQ has been reacting really well to the technical levels compared to the S&P 500, and I'll show you a couple examples here. So I did actually have this key level marked up on the S&P at the start of the week, and I didn't go for it because NASDAQ didn't quite align with it. And as you can see, it would have stopped us out. But when NASDAQ actually got to the level which I had marked out, which was just this wick here, S&P, it did a little bit of drawdown, but that's when it actually pulled back, and NASDAQ ended up doing the move from the level. And similarly, I also had another level coming in and around 552, and as you can also imagine, S&P did a little bit of drawdown, whereas NASDAQ absolutely nailed the level which I had marked out, it was on these wicks here, that one and that one there, and it absolutely nailed it before doing the move. So it's got me thinking a little bit. So I'm going to start charting NASDAQ as well. And I'm going to do a bit of live testing on it, because for me, I've always catered more towards the S&P. Because there was a time when NASDAQ was doing all the drawdown and S&P was nailing all the levels. So for that reason, I'm going to chart both of these pairs at the same time. So I'm going to start with S&P, and I'm going to do... I'll mark up all the key levels that I can see. So this one, it's already done the break retest, so I'm not going to look at it. I do have another level here. I have another level up too, just at that wick there, and another one just higher up. I'm only going to go 3 levels up, otherwise the chart looks all messy. And in terms of buy, I'll just have this one here. Yeah, you know, I'll mark this one too. It's a good enough level, especially if we have an alignment too. It's a good enough level for me to take. Yeah, so these are the levels that I have. And I'll draw a fib, so the only one that is valid for me is that one. Now, this is one of those levels where the key level is too high up for me. I don't like to split my entries on S&P. So in scenarios like this where the fib is too far away from the key level for my liking, I do just end up ignoring the fib and going for the strongest confluence, which is the key level. And it's similar to with the 50 fib, it's too far away, so I'm just going to ignore it. You know what, we can have a fib from here as well, just that level there, but same again, it's not, yeah, there's nothing too close for me for it to be worth it. And in terms of the NASDAQ, I'll just draw in the levels quickly. So yeah, if we, I'll mark this one up. It's not the best of levels in all honesty. It's more of a 4-hour level than anything, but if we get alignment, it could still be decent. Draw the next one up, which is there. That's a good one. And then the next one up too, which I see as here. And in terms of buys, these are a little bit further away, so I don't need to include that as one zone. I can make them 2 separate trades. And that's all I'll have. The next one's too far away, so I won't incorporate that right now. And I'll draw a fib as well from the very top of NASDAQ. Draw that down. So this looks a little bit better because the 38 lines up a lot closer than S&P did. I can also cover the SMA on it too. As well, the 50 fib lines up perfectly and the 61 also lines up really nice. So in terms of plays, NASDAQ is looking a hell of a lot better than S&P. But if we do get some sort of alignment on S&P, these look very good. So I'm going to include stop loss entries and take profits on both NASDAQ and S&P. And then when a trade is upcoming, I'll update as to which one I'm going to be taking. Now for Euro AUD. I haven't had any trades on this recently just because this massive push up. I've been waiting for the move to die down. So I did have this sell level here, but it did miss me. And then this level I wasn't actually interested in because there's no alignment. So now the next levels that I'm interested in, firstly this good old break retest here. And then also the next level down too. And then below that, this break retest here. I'll draw it up to incorporate that wick too. And in terms of sells, I'm not looking at any sells just because in my experience, any sort of weekly wicks on this pair along with GN2 just don't work. So for that reason, I'd rather be safe than sorry. I know my edge. I know what works, I know what doesn't, so that's why I'm only looking at buys for now. And I'll draw up a fib from here. So this is the only fib that's relevant in my opinion. So there's no fib there, but there is on the 38 with the key level. So I'll adjust that, and also the 61 too. So I can adjust that as well. So yeah, in terms of fib, yeah, I'm happy with that. So there's the 38 and the 61, which both line up with key levels. Now, the exact same way, I play it as always. I want alignment on this level here. Now, EN looks like it might not align. So depending on if it's an Australian dollar move, then I'll look for GA alignments instead. And if we don't have any alignment, then I'll look for a breach of it to just take this trade instead as an automatically valid trade. And same as always, if this one works, regardless of whether I'm in the trade or not, I now need alignment or time with a strong move in order to go for that. If we don't have either of those things, I then anticipate a breach of that to make this one an automatically valid trade and try and take that. Now the first buy level on EA is round about 90 pips away, and this first buy level that I have aligning with it is on GA, which is round about 100 pips away. So there's a chance that could align, but that's only if it's an Australian dollar related move. If it's more of a Euro related move, then I will look for EN for alignment instead. But in terms of Euro AUD, there isn't too much to update with. These are just the 3 zones that I've got. I'm not looking at any sell scenarios. And I'll move on to my next pair now. Right, now moving on to GN. So similarly to Euro AUD, I haven't been looking at any sells recently just because of this leg up. I did actually have this sell marked up, but because it had no alignment and it was shit timing, I didn't actually go for it. But I did, however, have this break retest marked up, which was also a 38 fib. Now for me, it actually missed my pending by round about 7 or 8 pips before doing a 50 pip pullback. And then soon after, it then tapped back into the level, and as you can see, it's done 300 plus pips, which is unfortunate, but it is what it is. And in terms of the week ahead, I will mark this level up again because it has in fact done, well, it's done around about 300 pips up. So this is something that, even though it's valid, it's not something that I'm keen on going for, only because it hasn't been too long since we were last at that price. But if we were to have alignment, then I would go for it. But if it comes on Monday morning, early Monday morning, I won't go for it, and I'll wait until later on in the day in order to take the trade. Reason being is because banks, hedge funds and institutions are positioning themselves early for the week ahead. And those are the types of moves that you don't want to go against. And more often than not, those types of moves, they usually last until the end of the session or until the end of the next session. That's why I wait until after midday or towards 4 o'clock in order to start trading. And in terms of the next levels, I'll mark up the next ones now. So we do have a break retest there. And then one more level down. I'll mark this up too. And the next one. So this here is something that I don't really want to go for, but if it's valid, then it's valid and I will go for it. And similarly again, so I'll draw a fib up. This is the only valid fib for me, so the fib is actually, it's only around about 30 pips away. Yeah, so it's within the zone, but now it's looking like it's not going to align with anything because it's just too close. And we also now have the 61 fib in and around this key level 2. And we also have a round number at 2.22, and which I'll have to incorporate for with my stop loss placement. Now what that means is we now have a buy zone which is around about 50 pips wide. So this is the type of zone which I would split my entries on. I don't mind splitting entries on GN, and this is the type of trade that I will split my entries on. Now what this means is that the first entry I go for will most likely have a negative risk reward, but then the second one will have a much better risk reward if we tap into it. But this zone will only be valid if we have two things. Firstly, a breach of this going into it, or secondly, if we don't have a breach and this first one works, or we have a pullback in between the two levels, then this one will need either alignment or timing with a strong push into the zone. Now, if we have a case scenario where we don't have timing, alignment, or a good push into the zone, if the 61 breaks, I won't use the break of the 61 in order to increase the appeal of the key level. I'll need alignment for both of these things. But if the 61 has no alignment, but then when we get to the key level has alignment, I'll then just take the key level instead, but with a much bigger stop loss than I would initially have. And same again, if we have a breach of it, then I'll take this one as an automatic trade, or if this first one works and then we get into this one, I'll use this as a breach in order to take that one, unless there's alignment on this first one. And in terms of alignment, this is the zone that I have on EN, so it's looking like this one's a bit too close for it to be aligning, and then this one is 130 to 140 pips away, when GN is only around about 60 to 70 pips away from that first level, so it's looking like it's not going to align. But that's only if this is a New Zealand dollar related move. If it's a pound related move, I'll just use GA instead. But that also looks like it's not going to align with GN. So to recap, I'm not looking for any sells at the moment on GN. But if we start moving a little bit lower down, I'll consider this this high here. And then this buy level looks like it's not going to align, so I probably won't take it. And then this one, I'm going to split both my entries if we have alignment with it. If not, I'll anticipate the breach in order to go for this one instead.